And well, for more on this, we are now being joined by Dr. Andrew Ferries. He's the CEO of Ecogonosis Advisory. He's joining us live from Uruguay. Welcome to WION.
Delighted to be here.
First up, I want to ask you that what impact could Trump's policies have on equity markets and investors' sentiment in the short term?
Oh God, this is a booming industry in my side of the profession, and the overwhelming majority of the staff has absolutely zero value added. So I'm afraid I'm going to give you a little bit of blah blah, okay? Because everybody says the same thing. I've got a completely different view on that, but the expectation is that initially there's going to be a boost on the equities because he has a lot of friends, particularly on the technology side. And then the reality will dawn in, particularly when tariffs are imposed, and that accelerates inflation. Now, my position is very, very simple, and it is unrelated to Mr. Trump. That is that the Fed is not, read my lips, the Fed is not going to cut interest rates for possibly the first half of the year. And that is going to be a reality which is unconnected to politics because it is driven by the fact that inflation in the United States is not coming down. And given that the possibility of Trump imposing tariffs is going to boost inflation, the Fed will be a little bit crazy to commit suicide and begin to cut interest rates at the time that inflation is accelerating. The economy is not doing badly. The labor markets are basically okay. We had some good numbers out of the November sales, but cutting interest rates is not going to be there, and that is going to have I would say immediate, but it will have a lingering impact on equities. So Trump's accession to the throne, okay, is going to be a little bit irrelevant, given that my belief is that Fed is going to spoil the party.
Right, Mr. Ferries, you did touch upon the rate cuts. Just to follow up on that, do you expect U.S. rate cuts to further strengthen global equity and commodity markets?
No. Okay, the Fed is not going to cut interest rates. Okay, I have explained to you in detail why. The answer is no.
My last question to you, how sustainable is the recent rally in European and US stocks given geopolitical and inflationary risks?
Sorry, this is also, look, we're looking at the same numbers. I'm not giving you a forecast. Okay, the idea that there was a sustained rally at the beginning of the year is just not true. Okay, the only two stock indexes that have got plus year to date is S&P and the Euro. Right. And then take a deep breath. In Asia, the Sensex, Malaysia, Thailand, Jakarta, Nikkei, Hansen Index, and the China CSI, all of them are down year to date in US dollar terms. So I'm sorry, we're not looking at a burst in equity activities. We're not.
Right, Mr. Ferries, thank you so much for joining us on World Business Watch with your insights.
It's a pleasure.